You want to learn how to make money in this market. Are you tired of missing out on the dip? Well, guess what? I'm going to break down how I like to go about buying the dip. Okay. There's two different strategies that I want you to implement. One is for the ETFs and for the stocks. And then another one is for those of you who dollar cost average. All right. So if you're a dollar cost averager and let's say you put some money into the market every single month, I think that's a bad idea in this environment. There's so much volatility happening week to week that I would actually recommend that you switch it to weekly or every 2 weeks if you can. So what do I mean by that? If you contribute, let's say $500 every single month to something like VOO or SPY, which is a broad-based ETF that's investing in the top 500 companies in America, instead of doing it monthly, see if you in your brokerage account, if you can adjust those automatic payments to be every single week, every single 2 weeks, because there's so much volatility that is happening in this market. And I believe that will continue to happen under Trump, that you could probably make a lot more money dollar cost averaging weekly rather than monthly. So that's one strategy I recommend you think about and possibly implementing to help you make some more money this year. Now, the second strategy is buy the dip. And everybody says buy the dip. And I'm sure you've been buying the dip, but you probably ran out of chip. So the key here is to buy the dip strategically. This is what I'm realizing. A lot of new investors, a lot of people who are messaging me and say, hey, I'm out of money. I didn't know it was going to go this low. How do you keep investing? How do you keep buying stock? How do you get these prices? All right, I'm going to keep it simple. If you're not going to put in the work to look up charts and to do the research, just do percentages. All right. So if you're on YouTube right now, I have the Vanguard VOO S&P 500 ETF up on the screen. And I want you to look at the 52-week average. All right. As of this recording date, the 52-week average is 563.92. So I'm going to type that into my calculator, 563.92. What I recommend for ETFs, now this is mainly for broad-based ETFs, it's subject to change depending on which ETF you're talking about. But for this specific ETF or SPY, I recommend you look to buy at about a 15% dip. So what I would do, take your calculator, write 563.92 times 0.85. That would get you at 479.332, which is a great price to buy. Right now it's at 495. A couple of days ago, it actually came down to, I believe, about 456. Yep, 456. So I would start with an entry at about 15% from the 52-week high. And I want you to do some homework, all right? Google it, ChatGPT it, do whatever you want to do. But look up how often does the S&P 500 come down about 15%. So that's a good entry point. Now, the next time I would want to enter is anywhere between 5 to 10% from that price. So 479.33. I'm going to put that in my calculator right now, times 0.95. That's going to be a 5% dip. And that would put us right at 455.36, which is super close to that low of 456.74 on April 8th. Okay. So now you can go ahead and decide to buy again there. And then now if it dips another 5 to 10%, you buy it again. That's how you strategically buy it. You don't just buy it because it went down $10. You don't just buy it because it went down $20. We need to have a strong percentage drop because the stock market likes to move in waves. We need to have a good percentage drop, a good dip in order for us to buy it. All right. Initial price point, look anywhere between 15 to 20% for an ETF and then start dollar cost averaging down every 5 to 10%. That's my strategy for ETFs. Subject to change depending on the ETF, but for most of you all that are listening, you're in very safe, non-volatile ETFs. So that's what I recommend. Now, I'm going to switch it up and go to one of the companies that I absolutely love this year. I've been preaching about it on Instagram, preaching about it with my clients, and they've been making some money with this one. It is CrowdStrike. Let's go. So we're switching over to CrowdStrike, and let's go ahead and look at its 52-week range. 455.59. 455.59. Okay. Now, with a stock, there's more volatility. So I actually like to double it. So if I'm going to do 15% for an ETF, I'm going to do double it and say a 30% dip is where I'm going to start being interested in purchasing that stock. So CrowdStrike 52-week high was 455.59. And since I want a 30% dip, I'm going to times it by 0.7, and that'll get us to 318.913. Now let's look at the year-to-date chart. So once again, if you're on YouTube, you'll be following along with me. The lowest they got was 308, and that was March 10th. And then it came down to 321 April 4th, 324-ish. Okay, so 321 to like 325 in April. But if you would have set that limit order at 318, you would have been able to purchase CrowdStrike on March 10th. And that's buying a dip. 30%, love it. That's on sale. That's on sale. That is a dip that you want to purchase, okay? Now, what's the next step? Now what I would do is say, all right, 318 I entered. Now, instead of doing 5 to 10%, which is what we're doing for the ETFs, what we're going to do now is 10 to 20%, right? So what I would probably do for CrowdStrike, I'd probably look to buy again, maybe at a 20% dip. So 318.91 times 0.8 gets me to 255. So around 255 range, I would possibly want to buy some more CrowdStrike after it drops. So that way you're not buying it every single time it comes down $5, $10. Because you have to understand there's something called support and resistance. And if you're not going to look at the charts to identify the support and resistant levels of a stock, I recommend you do this. Investing is not hard. I promise you, it's very easy. The hard part is for you to be disciplined and stick to the plan. When you hear all this tariff talk, when you hear all these people panicking that you're holding on to your assets, you're investing the way you want to invest. You are investing with a strategy. You have a portfolio that is built a certain way, and you're not going to let whatever is going on in the media, whatever is going on with your friends, whatever is going on with people's 401ks, deter you from continuing to be disciplined and stick to your process. All right. So you can't say nobody told you how to properly buy the dip. You can't say nobody told you how to dollar cost average. All right. Go from a monthly plan to a possibly weekly or bi-weekly, because we are in such a volatile market that things change week to week. You'll make more money that way. Start buying assets at a 15 to 30% discount, and buy it again when it's at another 10 to 20% discount. So if you have $3,000, put $1,000 in at the first level. Put another $1,000 in at the next level. Put another $1,000 in if it dips even more. That's how you win at this game. But stay disciplined and keep saving and keep putting money into your investment accounts, so that way you can always be ready to buy the dip and never run out of chips. All right. That's the way to do it. Strategic way. Keep it simple. Keep it easy. If you have any questions, please feel free to message me. All right. You can find me on Instagram at new_CapsRx podcast. Just shoot us a message. We could chop it up. This is a great strategy for anybody who's a new investor or looking to start investing on how to get into the game. All right. Take it or leave it. Do what you want. But this is what I'm doing. This is what I'm implementing. And this is how I'm going to make sure I reach 1 million by 40. All right. So if you want to be a part of the journey, definitely reach out. Definitely would love to chop it up with you guys. And if you're interested in any more financial content, definitely stay tuned. All right. We have more on YouTube. We have more on the podcast. All right. On the audio platform. So definitely check out any of our other episodes if you're interested to learn more about how to invest or how to budget and manage your money. So thank y'all for listening. Greatly appreciate the support. Have a good one.